In this presentation, we will complete our bank reconciliation as we have been constructing the book side of the transactions with the use of the bank feeds. Get warmed up because here we go with Xero. Here we are in our Triple G dashboard. We're going to start off by opening up our reports, going to the accounting dropdown, going on to that balance sheet. We're going to be opening up that balance sheet. We're going to then right-click on the tab up top to duplicate it. Right-click and duplicate. Then we're going to go back to the tab to the left. We're going to be opening up the income statement, going to the accounting drop-down, going on down to that income statement. Once that opens up, we're going to duplicate that tab as well by mousing over the tab up top, right-clicking on it, and duplicating that tab. We're then going to go to the bank reconciliation report, the one we're going to be focusing in on here, by going to the accounting drop-down, then go into the reports. Then the bank reconciliation report is going to be under the accounting information. So I'm going to go on down to the accounting information. We want the bank reconciliation summary. Once that opens up, we're going to right click on the tab up top once again and duplicate that tab. Back to the balance sheet tab. Within the balance sheet tab, we're going to be adjusting the dates now, bring that date up to April. That's going to be the month we are working in. So we're on up April 30th, updating the balance sheet. Income statement, I'm just going to change the beginning date because we only have data through April. So I just want to have the month of April, which is going to start in April 1st. And then nothing happens after April, so we don't have to change the end date. And then on the bank reconciliation, we want to be taking this from the checking account because that's the one we're working on. And we want to make the end date to be April once again. And then we will update that information. And then we're going to go back to the first tab and we're going to go back into that bank reconciliation information that we were working on. So we're going to go to the accounting dropdown. We're going to take a look at the bank accounts. Within the bank accounts, we have one more item to reconcile, and then we're totally done with it. So well, at least this portion. Then we'll do other stuff that's going to be great. So then I'm going to hold down Control, scroll up. It's bringing it up to that 125%, and we have the last item here, that being this $20. That's going to be the bank charges. Now, if we look at the bank reconciliation at this point, note what we have here is this amount tying out to the bank statement. I'm sorry, this amount is tying out to our books. And then this amount at the end of the day will tie out to the bank statements. It currently, I believe, does. However, we still have this $20 that's outstanding. And considering we're getting all this information directly from the bank, we're going to be removing all the items outstanding. There will not be any items outstanding because there's no timing difference because we're getting this information directly from the bank. So if we go on back to our first tab, then here we have the bank charges. Now this may look a little bit different depending on the bank that we are using, but typically they'll charge you for some types of things at some point in time for the services they are providing. We'll see those on the bank statement when they happen. And here's going to be our bank statement. So that's going to be the service charges down below. We will then be adding those to the book just like any other type of expense. We have it labeled as the bank charges. It might have a different label for different banks, but once we know what that is, then system here within Xero can help us to line that up. So we had this last time, and therefore it has a suggestion saying, hey, look, last month you had a bank feed or a bank charge, and you charged that to Chase, and it went to the bank service charge. And we're going to say, yeah, that's correct. So remember, these will usually be good, but you may want to have the practice of then taking that suggestion, making a rule with it. We'll talk more about rules at a later time, but just keep that in mind. So we're going to go ahead and say OK. It'll create the transaction on the right as we've seen in the past, and we'll take a look at our final reconciliation reports. So I'm going to then go to our balance sheet and say what happens to the balance sheet. If I update the balance sheet, we know, of course, that the checking account will then go down because that was a decrease to the checking account that we added. Let's go on over to the income statement. On the income statement, we're going to be including now the bank service charges have now appeared for that $20, so that is nice. And then we're going to go to the bank reconciliation. And once I update this amount will then change to what is on the balance sheet, and this will go away. So I'm going to say update, and that's what I think will happen at least. I'm pretty sure. I'm confident. And that's what happens, right? So this 186,623.08 is what is now on the balance sheet and is also what is on the ending balance in the bank statement. So the bank statement is here. Sorry, that was the wrong bank statement. So this is the correct bank statement. We have the 186,623.08, and that should tie out to the 186,623.08. So note, again, this isn't a very active report. It doesn't look like there's a lot going on. Just remember, that's because that's not always the case. So when you think of a bank reconciliation, don't think that the way that you're going to reconcile it will always be that what's on your books will tie out to the bank. That's not the case. Usually you will have reconciling items if you were going to go through the whole bookkeeping system. However, here we created our books from the bank statement. So we're completely dependent on the bank statement. Therefore, yes, in that case, you won't have any outstanding checks or deposits, because we put all of our information, we waited until it cleared the bank instead of us knowing what happened when we issued the transaction and then double checking to the bank. So in this case then, because we're using that system, we have this this match out where there aren't any outstanding items. Once done, it's nice to basically publish the report, so we can publish it so it kind of saves that report, and we'll have like a static copy of the report. That's going to be important because it can tell you if, for example, someone changes something in the future, goes back and backdates something and changes the transaction that has been reconciled. Then if you have it published, then you can hopefully go back in and kind of figure out. You can say, hey, look, this was reconciled at one point in time, and then you went back, someone went back in and changed the transaction in the past, and it kind of messed things up. Then if we go back to the first tab, we have now saying it says great job because we've reconciled it, so we feel good about that, of course. And then on the bank statement, if we go to the bank statement tab, we obviously had the $20 in the bank statement already, but now it has been reconciled. So we've reconciled that item. And then in the account transactions, we've added a new transaction, that being for the $20, which is now reconciled as well. Also note that we didn't have to add any transactions like we did in the first month, which was the beginning balance. We had to add the beginning balance for the first month, which is often a difficulty of the first month. Once you have that set up, and if you're on a system like this and you're just creating your information from the bank, then you won't have to do that anymore. Once it's lined up, it should be lined up, and everything should be quite easy at that point in time, because you're just totally reliant on the bank. We're just saying, hey, look, if it's on the bank, we need to include it. If it's on the bank, we gotta put it in our system somewhere. And as long as that is the case, it should be a very straightforward reconciliation process going forward. That's it for now. Let's get out of here.